Welcome to our comprehensive financial analysis of advanced micro devices in key for the fourth quarter of 2025. Today, we'll dive deep into AMD's market performance and technical data. Before we begin, please take a moment to like this video and subscribe to stay updated with our professional financial reports. Let's jump into the numbers. We start with the current market standing of advanced micro devices, listed under the ticker AMD on the NASDAQ stock market. As of the latest close on March 16, 2026, AMD is trading at $196.58, marking a notable increase of 1.65%. The pre-market data suggests a slight cooling with a 0.21% decrease, but the overall momentum remains positive. AMD has firmly established itself as a leader in the semiconductor industry, and this price point reflects investor confidence in its technological roadmap and market execution. Understanding this baseline is essential as we explore the underlying financial drivers that have propelled AMD to its current valuation. Throughout this report, we will look beyond the ticker price to analyze the company's profitability, balance sheet strength, and regional segment performance to provide a 360-degree view of its financial health. A critical component of our analysis is the valuation of the stock. Currently, AMD's price-to-earnings ratio stands at a significant 81.29, while its price-to-sales ratio is at 10.23. These figures are high, typical for high-growth tech companies where investors are pricing in substantial future earnings potential. Looking at the trend since the fourth quarter of 2024, we see a notable dip in the first quarter of 2025 before a steady climb back to current levels. This recovery in the PE and PS ratios suggests that the market has processed short-term volatility and is once again valuing AMD based on its aggressive growth trajectory in the AI and data center sectors. For investors, these ratios highlight that AMD is valued as a premium growth stock, requiring consistent execution to justify these multiples. Monitoring the convergence or divergence of these lines helps us understand if the stock is becoming increasingly speculative or if it is maintaining a stable premium relative to its historical performance. Solvency and cash management are the foundations of any tech giant. AMD's financial health chart reveals a strong position with a total debt of $3.85 billion. This is impressively low when compared to its liquidity and equivalents, which stand at $5.38 billion. Furthermore, the free cash flow for the fourth quarter of 2025 reached $2.38 billion. The fact that AMD's liquidity exceeds its total debt provides a massive safety buffer, allowing the company to navigate economic downturns or make strategic investments without financial strain. The robust free cash flow indicates that the business is generating significant cash after accounting for capital expenditures, which is vital for funding ongoing research and development in the competitive semiconductor landscape. This disciplined capital structure is a key differentiator for AMD, providing it with the flexibility needed to maintain its technological edge while returning value to shareholders through strategic growth initiatives. Moving to the income statement for the final quarter of 2025, total revenue reached $10.27 billion, representing an 11.08% increase over the previous quarter. This growth is accompanied by a strong gross profit of $5.28 billion. Net income for the period was $1.51 billion. The consistent growth in revenue suggests that AMD's product portfolio, particularly in the high-end computing segments, continues to gain market share. While the gross margins are healthy, the net income reflects the high operating costs associated with the semiconductor industry's intensive R&D and marketing requirements. Investors should note the steady upward trend in these metrics over the last year, which demonstrates AMD's scalability and its ability to turn increasing sales into tangible profit. The resilience of net income despite fluctuating global supply chain conditions is a testament to AMD's operational efficiency and strategic pricing power in its core markets. The balance sheet provides a clear picture of AMD's long-term stability. As of Q4 2025, total assets were recorded at $76.93 billion, a slight increase of 0.05% from the previous quarter. Most impressively, total liabilities decreased by 13.50%, falling to $13.93 billion. This significant reduction in liabilities significantly strengthens AMD's equity position and improves its debt-to-equity ratio. A leaner balance sheet with reduced liabilities provides the company with greater financial independence and lowers its risk profile. The stability of the asset base combined with the reduction in debt obligations shows a management team focused on optimizing the company's capital structure. For long-term investors, this trend is highly encouraging as it indicates that AMD is growing its business while simultaneously de-risking its financial position, creating a solid foundation for future expansion into emerging technological sectors. Cash flow analysis gives us the true pulse of the business operations. In Q4 2025, operating cash flow was a healthy $2.60 billion. Investing activities showed a net outflow of $1.54 billion, which typically reflects capital being put back into the business for equipment, property, or acquisitions. Financing activities also saw an outflow of $328 million, likely related to share repurchases or debt servicing. The resulting free cash flow of $2.38 billion is a standout figure, confirming that AMD is highly efficient at converting its earnings into actual cash. This liquidity is crucial for maintaining the fast-paced innovation cycles required in the chip industry. The consistent positive operating cash flow over the year shows that the core business is self-sustaining and capable of generating enough liquidity to fund its own growth without relying on external financing, which is a major strength in a fluctuating interest rate environment. Key efficiency ratios provide further context into AMD's operational performance. The price-to-revenue ratio is 9.21, and the enterprise value to EBITDA ratio stands at 46.06. These ratios, while on the higher side, reflect the premium valuation the market assigns to AMD's specialized role in the AI infrastructure and gaming markets. With a global workforce of 31,000 employees, AMD is maintaining a high level of revenue per employee, showcasing its operational efficiency. These metrics are vital when comparing AMD to its direct competitors like Intel or Nvidia. The stability of these ratios through 2025 suggests that the market's expectations are consistently being met by the company's financial performance. For an analyst, these numbers represent a company that is well positioned to capitalize on the increasing demand for high-performance computing, provided it can maintain its current margins and continue its trajectory of efficient resource management. Reviewing the latest quarterly results, AMD reported an earnings per share of $1.53, which significantly outperformed analyst expectations by 16.03%. Total revenue for the quarter hit $10.27 billion, beating the estimated $9.67 billion. Looking forward to Q1 2026, analysts are projecting an EPS of $1.27 with expected revenue around $9.84 billion. The substantial beat in the most recent quarter is a powerful signal of strong demand for AMD's latest generation of processors and AI accelerators. While the projected dip in the next quarter might reflect typical seasonality in the tech sector, the consistent history of beating estimates provides a positive outlook for the company's ability to navigate market expectations. Investors should stay focused on these reporting dates as they serve as the primary catalysts for significant stock price movements. The revenue trend analysis for AMD over the past several quarters shows a remarkable pattern of growth and positive surprises. Starting from $5.47 billion in early 2024, revenue has steadily climbed, reaching the record $10.27 billion in the latest quarter. Even more telling is the surprise percentage, which has grown from a slight miss of 0.07% to a series of beats, culminating in the recent 6.22% surprise. This trend indicates that AMD is not just growing, but is consistently outperforming the market's best estimates. The projections through 2026 show a continued upward trajectory, with revenue expected to reach as high as $14.48 billion by the end of next year. For any investor, this pattern of accelerating growth and consistent outperformance is a strong indicator of a company with high operational momentum and a product line that is perfectly aligned with current market demands. Finally, we analyze AMD's revenue by segment. The data center segment has become the company's primary powerhouse, generating $16.64 billion last year compared to $12.58 billion in the previous period. The client and gaming segments also remain strong contributors, adding $14.55 billion to the total. Geographically, the United States continues to be the largest market, accounting for $11.36 billion in revenue, a significant increase from $8.69 billion the year before. This shift towards data center dominance is a critical strategic move for AMD, as it aligns the company with the highest growth areas of the technology industry, specifically AI and cloud computing. The diversified revenue streams across segments and regions provide AMD with a balanced growth profile, reducing its dependence on any single consumer market. This strategic positioning is what allows AMD to maintain its growth even when specific sectors like PC gaming face temporary slowdowns. That concludes our deep dive into AMD's Q4 2025 financial performance. From record-breaking revenue to a strengthened balance sheet, the data shows a company in a very strong growth phase. If you found this analysis valuable, please hit the like button and share your thoughts on AMD's future in the comments. Don't forget to subscribe for more professional technical reports. Thanks for watching, and we'll see you in the next video.